right, wonderful. It's good to be back here. Why don't you each take 30 seconds very briefly to introduce yourselves and what your firm is doing on-chain, and then we'll take it from there.
Great. Hi, guys. Sandy Call. I'm with Franklin Templeton. We are very invested in this digital asset space. We've been working in the space since 2017. We have a tokenized government money market fund. We have multi-coin SMAs and portfolios. We have private funds and venture capital funds. And we have several ETFs. We've built our own infrastructure. We're deployed across 8 different public blockchains. And we do our own node verification across 12 different chains. So I'm very excited as someone who gets to be part of the leadership of this group. And I'm thrilled to be here with some of the people I've worked with for many years in the industry today.
Hi. I am with the digital asset management business at Fidelity. We at Fidelity have been in this space for over a decade now. And as we look back on the journey, what we can look to is where we started, which was with Bitcoin. And a big part of that journey and why Bitcoin was really just understanding blockchain technology and what the overall possibilities are for the capital markets ecosystem and in financial services. And then from there, how do we actually harness this technology and deploy it into capital markets? And so infrastructure is where we started in building out our own custody solution. And then from there, as we continue to expand over the years, asset management was a very natural extension, and a couple of years ago, we built out a investment management business, which included research, building out data infrastructure to make that data compatible with many of our traditional back offices. And what that did was it really set us up for being able to bring traditional investors into getting exposure into the digital ecosystem. What we are working on more recently is the other side of the liquidity and capital flows between traditional markets and digital markets. And this is being able to bring traditional instruments on-chain in order to allow for digital capital to be able to flow the other direction. So while we have helped facilitate with others in this space bringing traditional capital into digital markets, capital needs to flow both directions. And that is a really exciting part of this journey that we're going to be on together.
Hey everyone, I'm Will Peck. I'm head of digital assets at WisdomTree. WisdomTree is the world's largest independent ETF sponsor, manage something like $110 billion in assets under management. So with that, we do have a suite of crypto exchange traded products here in the US and also out of Europe. So that's one part of our digital assets efforts. And the other part is around tokenization, as you could tell by the panel. So we've got a suite of 40 Act mutual funds that are tokenized here in the US, stablecoin, gold token as well, and then some products and services around those. So for retail, that's WisdomTree Prime here in the US, and then we've got a B2B platform we call WisdomTree Connect. So great to be with you today.
Hi everybody, Mark Garabedian. Pleasure to be here today. I am the Director of Digital Assets and Tokenization for Wellington. I have not done nearly as many cool things as the people to my right here. They are pioneers in the industry, and I'm pleased to be sitting next to them. But we have made some progress in the space. We've been partnered on a lot of the proof of concepts that have hit the airwaves and made a splash in many different areas, and we've been exploring tokenization, particularly of the fund vehicles. We view that as an opportunity to democratize access to financial products, to be able to put our alpha into the hands of more people across the world and give them a better end-to-client experience. And so we've made a lot of progress in the space and continue to do some research in the area.
Awesome. Well, one of the topics of the day is that we could be at a pivotal moment in the tokenization of assets and moving financial markets on-chain. It certainly kind of feels that way, to be honest, but that has not always been the case, right? And I know you alluded to it. You guys started a while back. Can you just elaborate a little bit on What was it like over the years to kind of pursue that tokenization agenda? Does now actually really feel different? What is that like?
Sure, I'll get started. Cynthia's been in it longer, so I feel like I should.
I don't know
defer
about
to her.
that, but
But yeah, I mean, look, it has been a very interesting journey because there's really two sides to this business, right? You need to engage with the crypto natives and really understand the businesses they're building, the thinking behind the businesses they're building, because I am an absolute believer that crypto natives are disrupting the industry in ways that no one from within the industry could have done themselves, right? We grow up within a system. It's very hard to think outside the boundaries of that system. And so, making those efforts to really meet, to accept on their own terms, to listen with open ears to the digital natives has been a critical part of the journey because, you can't improve the innovation if you don't understand the innovation. And a lot of people's knee-jerk response to all of the changes that are enabled by these new crypto technologies is to say, no, bad, don't want it, not real, why would that have value, right? And so you have to get over that internal hurdle. I've been in the industry 40 years, right? 40 years in an industry, you're pretty steeped in the industry's thinking. So you have to make a conscious effort to get outside that thinking. And then it has been a very difficult and slow slog with the regulators, particularly here in the US. We have made a tremendous amount of progress with the regulators, even during the recent regime, but it has taken an amazing amount of effort, right? We have an entire team who does nothing but create materials for the regulators so that the regulators can have frequently asked questions answered, that they can see the same presentation over and over and over till they get it, that we can meet regularly with them to answer questions, that we can stage out the enhancements and improvements we're asking for so that they're comfortable at each stage that they're not going too fast. So on one side, you've got to go very quick and be very open-minded and be very willing to disrupt yourself. And on the other side, you really need to take the regulators on a journey with you and use your reputation as someone they trust to get them comfortable that it's okay to move forward. And so I do love what you and what Nathan were saying, Ian, in that it is a pivotal moment, I think mostly because some of that journey on the regulatory side does feel like it's going to get a little easier. And I think that there's growing and more acceptance and excitement about the innovations that are available.
I couldn't agree with everything that you just said more, and such appreciation for your and Franklin's work and Will and the work with regulators. I think more of voices coming from traditional financial world and thinking about how we can help translate the utility. We talk a lot about instant settlement and we talk about cheaper transaction costs, but that alone doesn't really resonate with most everybody that we talk to in traditional markets, because I think what Sandy just said, a lot of people will say things work really well in public markets, capital flows, but I think they miss the point that there is still a demand that outstrips the availability of capital to fund businesses, and that's even here in the U.S. And we see that with the growth of alternative bank financing options. And so, from the asset manager's lens, when we talk about what this technology can do, and I very much love the framing that, in talking to entrepreneurs and developers in this space, they're able to think about capital flows in ways that are not in any way, guarded by the way that traditionally things have happened this way, and traditionally this is what we do, and so therefore, why do we need to change things? But they're coming at it from a completely different way, and being able to provide that translation into real life use cases is really, I think, what we are now able to have those conversations and deploy, not just in proof of concept, but live market, whether we call them live market pilots, but putting these technologies into actual practice to move and allocate capital differently.
Anything to add?
I'm reminded of some dangerous words in finance. This time it's different. I think a lot of, like, I've been coming to conferences. This is probably the nicest one of these, but conferences and tokenization, for the past, I don't know, 5 years. And like some people have been working on this for a long time, like really banging their heads against the wall. And at each one of those, they said, "Oh, this is time. It's time now." So I'm like a little, like I don't know that everything's going to change automatically overnight. I think there is more recognition, and I couldn't agree more with what Nathan said earlier. It's like, so everyone used to say like, "Oh, you should do this with private assets, right? Like, let's tokenize this hotel." And it's like, well, does anyone want to buy the hotel, right? Like, it's not like the existing financial markets infrastructure is so bad that if people wanted to buy the hotel, they couldn't, right? Like, what actually is tokenization, doing it on public blockchains, doing for you anyway? So I think there's more of a recognition of like, well, we see stablecoins, right? Stablecoins now at $200 billion. I think Coinbase put out a stat recently that they stablecoins did $10 trillion in volume and transaction volume last year. So like clearly there's something there. And I think the next question is being what can you build to like serve additional users, like people who are using stablecoins? It's solving some need for them. Can tokenizing other assets solve more of those needs as well? So that's the approach that I at least take towards it. I think it is different than like, things don't work over here, so we're just going to whole hog rip it out and like do something else. I say that like a little facetiously, but that's. If it's going to be different this time, I think it's a combination of that recognition and also like a more constructive regulatory environment around that. But even that, could take a little bit more time than I think people are expecting.
I'll go quick. Everything everybody said was excellent. We've had 2 endeavors in the space. One was through proof of concept, and it was simulating tokenization of a private vehicle. The other one, a sub-advisory relationship with an issuer out of Singapore, FundBridge, and they've published out or issued out a fixed income fund. Both of those were pivotal within the organization, and I think with a lot of our peers and partners that I've had conversations with, particularly because when we started through this journey, the question that I would often get is, how are we going to afford the technology costs and the operational costs to go out and put a tokenized fund into the marketplace? And there's going to be all of these compliance issues that we're going to have to comply with and everything. And in reality, when we went through both of these processes, the entire firm, and again, our peers and partners, recognized that you can outsource a lot of that to, platforms, particularly, in the case of where we are in Singapore with FundBridge, Liberia, we've partnered with, they handle all of that technology capabilities that you need. And from the asset manager perspective, the investment manager perspective, we're just focusing on what we do best. We're picking the best assets to put into the portfolio, delivering what we call business as usual product and services, and now having open up access to new markets and new client segments. And so I think as more and more people start to get used to that potential where it doesn't take a huge budgetary outlay in order to access this technology, that's going to really move the needle forward.
Wonderful. Well, as you all know, Ondo is building out a platform to facilitate the issuance of tokenized assets and bringing more institutions on chain. You're probably very bored of it at this point because I feel like I spoke to you guys a lot about it. But as you all have moved on chain already in various shapes and forms, what has been the main hurdle that you have faced? Or I guess put differently, what is really still needed in order to move trillions or maybe start with tens of billions on chain?
Someone asked me the other day, do I think it's supply or demand that's going to drive the next wave of tokenization? And I said, I don't think the answer is either one of them. There's no shortage of the supply of tokenized assets that people have been trying to tokenize. There's lots of tokenization platforms that say, if you bring me your asset, I'm happy to tokenize it for you. And I think that's not the hard part of seeing this next wave of adoption. Supply or demand, I think of as there's nobody that's calling up anybody at Fidelity saying, I really want to buy a tokenized asset. And I think Will mentioned this earlier. The tokenized asset or buying that asset on chain is not in and of itself what people are looking for. People are generally looking for financial solutions to help them manage their financial lives. And so I think it's really utility. And what I liked about Ian, what you and Nate are talking about is not just bringing assets on chain, but building the applications to allow people to deploy those assets, to be able to get access to capital, or to be able to generate yield in ways that make it easy and seamless for them. And I think that's really where we're going to see more adoption. And so why there hasn't been a lot of adoption, and we've got lots of folks in our organization who say this is definitely not the first or even the second time they've heard that this time it's different. And the this time it's different, the answer as to why they would point to as to why this didn't work so well was there's just not that utility that is going to cause people to build the infrastructure to be able to plug into and get access to those tokenized assets. And I think without that infrastructure, there's not going to be this wave of adoption. And that infrastructure isn't going to get built until people find that there is utility that is worth them making that investment to build the infrastructure for.
Yeah, I would add to what Cynthia said, which I think is spot on. I would add there's two foundational mindset shifts that have to happen in our financial ecosystem for us to really get to broad tokenization, and as particularly of real-world assets. And the first is don't underestimate how difficult it is going to be to move from an account-based system to a wallet-based system, right? You need a wallet to hold a token. You need a wallet to enable many of the benefits that blockchain provides. And if you don't have a wallet infrastructure, it's very hard to really get excited about tokenization. And all of these traditional financial firms, our traditional intermediaries, the financial market, entire ecosystem, everything has been built around accounts. There is no such thing as a real portfolio. A portfolio is a virtual construct of different accounts. And therefore, the idea that I could commingle assets and use assets interoperably is completely foreign to anyone coming from a traditional background. So we need to make this pivot from accounts to wallets, which is going to take time. And more importantly, we have to unwind everything that we did in the early 1970s, right? Prior to the early 1970s, we traded one trade at a time, right? This was the problem. This was why we had the paper crisis, because you had to exchange your paper certificate to get paid for having a transaction. And we couldn't keep up with the volumes that were starting to grow. And so we put together committees, just like we're putting together committees now. There's an amazing parallel in what's happening to the early 1970s. But we're putting together committees, we're working with the regulators, we're trying to come up with a new system. But the system they came up with started to have central counterparties, started to have central depositories. We started to have clearing organizations acting as buyer to every seller and seller to every buyer. We started netting portfolio positions. We started doing book order entry and ownership, right? We have to unwind that whole system to make this new system work. And until we really recognize that and embrace that, it's going to be a hard slog, I think, from the real world asset side.
And the motivation, right?
And the motivation,
Yeah,
why?
that's exactly it.
Yeah, I think a lot got well covered there. We think about things in ETFs a lot. WisdomTree was kind of founded on the premise that you could have a better index and also in the better structure. So ETFs are better than mutual funds, and that's really been true, borne out to be true over time, where ETFs have taken in, tens of trillions of dollars, and mutual funds relatively flat, at least on a flow basis, or down. So, for us, that was the attitude that we brought towards it. But you got to remember, the SPDR, the first ETF, sat there for 7 years, not getting used. So, it's not always so obvious, what's going to be this great, or these things just take time, is I guess part of it. And it's not a perfect analogy, but maybe it's helpful. So, despite my joke about this time it's different, sometimes these things do take time. I completely agree with things that Cynthia and Sandy were saying around you got to need wallets. There's a lot of stuff that needs to change for the model of hey, instead of buying, the S&P 500 in my Robinhood account, I'd buy it in a wallet different. Maybe that's not actually how it goes. Yeah, I don't know. That's my only additional color on that.
So I'll echo the wallets are definitely key. Proliferation of wallets. I think building in more use cases for wallets, digital identity frameworks embedded in a wallet that you can use and I was at the airport today. It'd be nice to not have to carry my physical license on me, and still be able to get onto a plane. So the wallets are really key, integrating that into people's lives. Nathan talked about it earlier, and I love the way he said it, but today, you have multiple different accounts that hold your financial assets. You have password-protected websites. You go in, your assets are segregated over here for that account. Your assets are segregated over here for this account. What this technology allows you to do is sort of bring those assets together under one roof, and that enhances the utility of those assets. The utility of those assets we all experience through DeFi today. It's a beautiful system. You can do a lot with those assets. The infrastructure is phenomenal. The UX is difficult. It's very hard for me to get the general person on the street to want to go explore DeFi. They're afraid, frankly. And so I think the next paradigm for solution, and again, innovators building platforms are obviously doing this, but building a better user experience, something that your general public feels really comfortable going in, accessing, and can do it in a confident and safe manner, but be able to get that DeFi experience.
Yeah, no, well, very well said. I want to shift gears a little bit and talk more about why are you tokenizing assets in the first place? I feel like you were starting to go there a little bit, Mark, but why do this in the first place? What are some of the results that you have seen to date with your broader digital asset efforts and the tokenization of assets? And maybe this time I'll actually start with Mark, because you guys are the most recent entry, I think, into the space, at least on this panel.
Thanks, absolutely. It's a barbell approach that we've looked at right now. And so starting on the private side, private markets and alternative funds, that's an area that, we expect to be growing in the marketplace, for the next few years. There's a large segment of the public that is locked out, does not have access to those investments. Everybody wants to have a private equity allocation, potentially a private credit allocation within their portfolios. Those, both are attractive investments. It's regularly being considered as part of proper asset allocation now. However, due to the way that those vehicles are set up and account minimums, funding minimums for getting into those vehicles, and some of the other restrictions, again, large swaths of society get restricted from access. Tokenizing them, being able to fractionalize them, being able to use digital identity, being able to add additional liquidity mechanisms through secondary trading really opens up access for a large swath of the public, democratizes access to those investment opportunities. And so, from that side, it's exciting. On the other side of the barbell, you talk about traditional funds, short duration and other money funds that are out there. There's a lot of different areas of applicability. If you just think about, traditional finance and traditional business, the whole process today of pledging assets as collateral within the traditional financial ecosystem, pledging assets as collateral in order to take a borrow for overnight loans and or lending money overnight. It's somewhat inefficient. It's a myriad bunch of systems. End of day settlement. It's kludgy, lots of different reconciliation. Using tokenized funds within that ecosystem could add a ton of efficiency, and we're already starting to see it with the pioneers there. That now you're able to bring that to intraday borrowing and lending, which just frees up more liquidity into the market, which benefits everyone. So, two-pronged approach where the benefits are.
I alluded to some of this earlier. I think this idea of what could be this next disruptive wrapper. And also, asset management is incredibly competitive. We're up here with a bunch of people who manage trillions. We don't manage trillions, and we had somebody managing trillions speak before. It is a highly, highly competitive space. And I'd say the ETF industry in particular has ruthless fee pressure and competition. And that's great for customers, right? It's also, I think, for all of us who are in this business, you're trying to find ways that are able to do right for your shareholders, kind of solve additional problems for people. maybe not even charging more fees, but kind of growing the addressable market for stuff that you're able to sell products into. And so that was kind of an attitude that we took towards this, which was like, hey, we think this could be like the next wrapper, or maybe it's not going to be that simple, but like part of the next wave of innovation in asset management. And we think it grows the pie for people that we're offering our products and services to. And over time, right? That may not happen today, but like if we're talking about like a global world of billions of people who are able to get access to like U.S. financial products and things like that over time using this infrastructure, that's a big deal. And so for us, that was kind of the reason we approached it. And I think you can point to things which frankly have not totally been borne out yet about liquidity, transparency, standardization, peer-to-peer, native peer-to-peer transfers being things that are better about tokenized real-world assets versus like legacy systems. Again, those need to be borne out more and more over time, and hopefully with changes in regulation and some other stuff, more developments, they will be. So it should be a good customer experience for people who want these things. And also, hopefully for all of us doing this from a business perspective, good business to offer these products to them.
So I think a couple of things maybe I would add to everything else that's been said, which I very much agree with. Looking at it from the asset manager's lens, and you had just said this, Will, about thinking about tokens as maybe just another delivery vehicle or another way to be able to deliver in a one token, one stop fashion, a particular investment experience. And you can do that and deliver that in a more cost-effective and efficient and highly customizable way. And these are all things that as asset managers have evolved over the last several decades. We've struggled with this idea of how do we pool client assets in ways that we can scale the offering of the different exposures that we can create, but then still be able to deliver and offer a customizable individual client experience. And managed accounts, right, is one way that has sort of gone beyond what commingled vehicles, ETFs, and mutual funds have been able to do. But then, of course, that is still subject to all of the same, traditional capital markets challenges around. Now we're into T+1 settlement, and I remember back in the day, right? It was T+3, and there was T+5, and so each time we've shaved a day off of the settlement period, everybody's like, hurrah! But you've like massively changed the back office processing because a lot of these back offices have hardwired, right, the expectations of settlement time. And if we now have this technology that can speed the settlement, now you're massively going to have to change people's back office processes again. But from our standpoint, we think about it as reducing the risk of these extended settlement times. You're improving the capital efficiency of not having capital tied up right over the periods of these settlement times. And so when we talk about what the benefits of tokenization are, it's not we can suddenly move everything on chain and it's going to be great. The value of reducing risk, the value of capital efficiency and managing your collateral more efficiently and your balance sheet capital, right, is put to more effective use. Those are themes that really resonate more with people than just simply saying, we can do instant settlement and cheaper transactions. So when we talk about it from that standpoint, it is truly revolutionary how it is that we're going to do all of this. But it is a massive journey to get there.
Yeah. And the only thing I'd add to all of that is the economics of this for asset managers is very important, right? I mean, we have seen over the past just 13 years, there was a recent report out that said operating expenses have gone up 85% for the asset management industry at a time when average fee revenues are down 15%. Those are not workable long-term trends, right? And so we were very fortunate at Franklin Templeton because our CEO had run ops and tech for many years. And we were our own transfer agent. And a transfer agent basically keeps the shareholder record. Every mutual fund has two records. It has a record of all of the securities that are owned by the fund, and then it has a record of all the people who own shares in the fund. So, you've got two ledgers for every fund. We have thousands of funds on our platform. So you can imagine the bookkeeping expenses that we had in just that one function. And so we began our blockchain experimentation to try and see, can we save costs? That was a very simple kind of value proposition we were testing. And we found a 50x savings in our costs. That's a huge shift. That starts to really wake you up to how costly and inefficient and stagnant a lot of these firms have been to manage all of these operational processes. But what it also woke us up to was, oh my God, these blockchains are great. They're cheap to work on. Developers can come to the table. They get things done so quickly, right? It also showed us the value of the ecosystem. And that's why we always tell people, do something in the ecosystem, even if it's a proof of concept, because once you work in the ecosystem, you really start to understand the power of what these new technologies can do. So I think it really, in addition to everything they said, the capital efficiencies, the settlement efficiencies, it's going to also allow firms that have been in business for decades or more to remain competitive and reassess our own cost structures to be here in another 50 years, sitting on a stage talking about the next wave of Wall Street 3.0.
Ian, can I just jump in really quickly? Because we danced around something, the four of us here, but we didn't call it out specifically. Super important. It's cross-border distribution. And so, we've seen this with stablecoins. Like, one of the big successes of stablecoins is it goes into every single country, seamlessly. When you're talking about tokenized securities, tokenized commingled vehicles and stuff like that. There's obviously compliance and jurisdictional restrictions that are required to be complied with in every single country that you issue it into. That leaves a lot of underserved markets because it's hard for an investment manager to deploy a vehicle directly into one jurisdiction and then be able to generate enough assets for that vehicle to be profitable within that jurisdiction, serving the clientele. Tokenization, you can embed those compliance controls directly into the asset itself. Revolutionary right there in our industry. That makes that asset capable to cross borders, go into each one of those jurisdictions, pick up the assets that are within that jurisdiction, and have a profitable vehicle. That's a game changer.
100%. I love it. I loved where you started going too about partnering up with the ecosystem, and I love where you're going with the new technologies that are enabled with this new infrastructure. We actually had an announcement, Ondo Finance had an announcement this past week with a lot of the asset managers on this panel, where we announced Ondo Nexus. We have diversified the backing of OUSG beyond BIDL to include a lot of the assets that are being issued or managed by these entities on chain, so that ultimately we can build towards 24/7 redemptions against stablecoins of these tokenized funds 24/7 over time, right? That to me is a perfect example of these new types of innovations that a crypto native company like Ondo can build towards and then offer it to other asset managers. So I guess building on that point, what are some of the things that crypto native companies do very well? What are some of the things that the asset managers do really well? And how do we bring together the best of both worlds? Free for all. Go for it.
Well, I think that and Mark had started to touch on it. I think that the thing that they've done really interestingly well in the crypto ecosystem, besides invent the ecosystem, so thank you, is I love the solutions that we've started to see around digital identity. And I think identity is still one of the biggest hurdles to us transforming the financial ecosystem. The way the rules are written now today, Cynthia, Will, Mark, my firm, we could each have the same customer, and we could be trading with the same customer, and we cannot share our know your customer anti-money laundering rules with that customer. This is a huge burden. Every single one of our organizations has to do all the work to do the investigation of that customer. We can't share the work. There's no central ledgers that we can go to update data. We all have to update that data independently. There's sometimes instructions attached to that data that gets out of sync, and we have to spend days trying to reconcile with each other what our instruction systems say. It's just a mess, right? And so one of the things I'm most excited about is this opportunity to completely rethink how we identify and enable a transaction, identify the participants in a transaction and enable those transactions. And there's lots of interesting solutions, from soul-bound tokens to centralized ledgers that everyone can share and update, and centralize the risk in the ledger. But there's so many potential solutions, and if I had to pick one spot that I'm super excited about, it's what's going to be possible with digital identity and how that will open up the system so much more effectively.
Yeah. I can add on to that part because absolutely 100% there's a customer experience as well, and on some larger financial platforms you end up as a customer having to give your AML KYC information multiple times to the same organization, because even within those organizations they have not figured out how to share. I'm not calling anybody out here. But I think to add to that, what I really have appreciated about the way in which the developer communities and the crypto natives, as we've been saying, is this focus on public infrastructure and standards. And when we explain to people about why it is that public infrastructure is important versus private infrastructure, and I'm not saying that there's not a place for both types, but in order for a market to really truly function, you need to have trust in being able to facilitate transactions. And where I think Sandy talked a lot about the different centralized counterparty clearing agencies that have formed, that's all about how do you get the large counterparties in the industry and in the market to agree on some centralized standard for how they can trust one another in transactions. And what the blockchain and what smart contracts enable is not the need for this centralized group of people. You can agree on a standard and have that embedded in the code, and that have that available market-wide. And building with that standard embedded versus each person building their own thing and then realizing, hey, wait a minute, in order for me to be able to trade more freely, I need to get everybody together in a room, and we need to set up another committee in order to figure out what the standards are. So this is an opportunity, I think.
Yeah, I mean, I was thinking, kind of laughing. I think the cynical way to say this would be like the crypto industry's found a great way to monetize gambling in a certain way, right? I don't. No, I'm serious. Well, I'm joking, but I'm also serious. And I think Nathan alluded to this earlier. Yeah, a lot of the stuff is token price goes up, I want to buy it. That draws a lot of, it's volatility, attention, more capital comes in chasing those returns. Companies have figured out ways to monetize it, although, some certainly better than others. So that's one thing, but the kind of better answer is what Cynthia was saying around these open standards and kind of permissionless natures of blockchains. I think it is interesting. If you did one of these conferences 5 years ago, you would have talked a lot about private blockchains or these big consortium that did these, big things and or trying to do these big private blockchain things where they brought a lot of people together, and that was kind of a concept du jour at the time, and I think that's faded away a little bit, and people recognize that, no, the permissionless nature of these blockchains, the fact that you have kind of open source stuff going on, that people have a set of standards that allows it to communicate, and that's really where the advantage comes around. I think that's been a really important development that I think something that a lot of the traditional finance firms can learn, because I think one of the concerns with, not just more the big banks than the big asset managers is that people are building these little fiefdoms of oh, this is my little blockchain over here that I'm using for this stuff, which to me is kind of anathema to the ethos of what's trying to happen here or what the benefits are coming from. So I guess that'd be something that TradFi could learn from crypto here.
So I'll round it out. Prior to stepping into the role that I'm in now, my background was trading and market structure, and I was in that space for 2 decades. And really, I've traded everything every which way all across the globe. The first time that I used the Uniswap application, I was blown away. What I received was no counterparty risk, no credit risk, no settlement risk. Yes, there was platform risk, but something with which I could digest, and an immediate increase in the velocity of money because the transaction was instantaneous. Not only that, but the way that the platform is set up is I could move from any asset to any asset. Those are all huge game changers for our industry as well. I mean, again, increasing the velocity of money, that's a huge game changer. Not having to go from an asset to a cash leg back to an asset, that's a game changer. We've been trying to solve in traditional financial markets, we've been trying to solve the sort of retail order flow dilemma for a very long time. Commissioner Pierce has touched on this herself, but it's perhaps these decentralized exchanges, the protocols that are like Uniswap, and the evolutions since Uniswap has come out that could be the best way to solve the retail trading paradigm and to give that liquidity the best shot that it deserves. Other applications, we could talk about Aave. Aave also great innovation just in terms of collateralized borrowing, lending, and opening that up as a platform. GMX, a couple of other ones that have really revolutionized leverage trading and done it in a way where it's not sort of adversarial. And so, yeah, I think crypto has done a lot of those innovations very well. And it's incumbent upon us to sort of figure out how to institutionalize and, make those applications something that we can take advantage of on behalf of clients.
I love it. You could have been the introduction to the DeFi panel later on. I love it. All right, we have 4 minutes left, so probably time for one more question, and it will be, short answers. It's been mentioned a little bit before that the past couple of years has been, I believe you mentioned, a slog with the regulators. Clearly, this new administration has a more favorable view towards the industry. We'll hear from some regulators later in the day, but if there was one thing that you would prefer to get clarity on in the next couple of years, what would it be?
Well, for us, the one thing we'd want clarity on is we want to be able to trade tokenized real-world assets in the same exchanges and through the same market makers that we can trade crypto assets, right? I think it's the interoperability between the systems that's going to really be the spark that allows for these new models to really take hold. So that would be, I guess it's the special purpose broker-dealer rule, or I don't know what the official rule that limits us is, but getting rid of that rule.
Very good.
I honestly wish for the same, and maybe the corollary to having intermediary clarity. As an asset manager, I'd like to know that I can put tokenized assets and traditional assets in a mixed asset portfolio and know who I have to call in order to get that product registered.
Yeah. Please, that too.
That too, right?
Sounds reasonable.
I'll pick a different one, just to pick a different one. I think banking regulators, right? Like I think to some extent, like the difficulty in banking crypto-related businesses was real, and I think seeing change from kind of the various, different federal banking regulators out there, giving people more clarity. Doesn't need to be everything, but stable coins, right? Like how are stable coins going to feel? Are they going to feel more connected to the existing financial system here in the U.S.? I think would be a big development.
I talked a lot about the DeFi application, so I'm going to stick with that theme. There was an update proposed to Reg ATS, and it doesn't seem like that's going to go forward. It would have swept up protocols like Uniswap, and I think that would have been a loss for the industry. And now we're looking at, again, both the SEC and the CFTC that seem like they want to find ways with which these applications can be brought into more of the regulated sphere, and so that's a welcome change.
Wonderful. Thank you so much for joining this panel, and I think that's it.